Is the stock market likely to crash again in 2020? Now, in March, the stock market crashed over 30%, and if you're anything like me, you might feel like you missed out a little bit. In hindsight, I do wish I'd put a bit more money into the stock market back then, but the thing is, you can't time the market, right? Like the old saying goes, time in the market beats timing the market. So it's very, very hard to know what's going to happen next. Of course, it's very, very easy to look back and go, yeah, I wish I put loads of money in, but I don't really regret it because it's just unpredictable and the stock market could crash again. Now, when the stock market did crash, the Fed acted quickly and aggressively, buying junk bonds and equities to pump the stock market back up. So in this video, we're going to kind of look at a few different factors to determine, is the stock market likely to crash again this year, and what should you do about it? What strategy should you adopt? But again, I'm not a financial advisor, so you've always got to do your own research before you do put any money into the stock market. This is just for sort of education and entertainment purposes. But before we start, please hit that thumbs up. It would really, really help out. I'd really appreciate it. Please also consider subscribing down below if you do like the videos and you find some value in them, and so you're notified when I upload my next ones. So let's look at a few different factors. Now, as we know, the economy and the stock market are not the same. They're pretty much detached at this point. With cases of the virus growing in America, there's over 10,000 cases a day being reported in Florida, with over 4 million cases in America, and nearly 150,000 people have died. The situation is getting worse. The unemployment figures are also on the rise. So why does the stock market keep going up and up and up? As I just mentioned, the Fed bought junk bonds and they bought equities, which pumped the prices up. They also reduced interest rates. So by reducing interest rates, it means that it encourages people who are saving cash in savings account to put money into the stock market, as they're getting no return in savings accounts. It also increases the chance of people buying homes, because interest rates are so low. It's a good time to buy a home in that case. Now, with the Nasdaq up 20%, it does show signs of a bubble, in my opinion. If you were to tell me like a year ago that we'd have this global lockdown, it'd been going on for months and months and months, businesses are getting closed, the Fed have got over $7 trillion on their balance sheet now. Where do I think the Nasdaq would be? I would be very surprised if I said it was even break even. I'd say it'd probably be down like 10-20%, despite it being tech based. So it is showing signs of a bubble, but remember, the stock market crashes because of behavior, not fundamentals or technicalities. The stock market is driven by fear and greed, basically. When people are acting very, very greedy at the moment, as Warren Buffett says, you should be fearful when people are greedy and greedy when people are fearful. At the moment, people have been very greedy. It's showing signs of a bubble, I think, when people you've never heard talk about the stock market before, your friends, your colleagues, start talking about a bit of money they made here and there, investing in stocks. So in my opinion, it is showing those signs of a bubble. However, the stock market is forward thinking. So the stock market isn't concerned about what's happening tomorrow unless you're a trader, but the large majority of the market are investors. So when you buy a stock, you're thinking, what's happening with this stock, this company in a year, 2 years, 5 years, 10 years. You're not thinking about what's happening tomorrow. So at the moment, the leisure and travel industry is suffering a lot, but pretty much all of the sectors have recovered. So with the growing number of cases in the US and an election later in the year, there's a lot of uncertainties ahead. Now, if the US goes into another lockdown, like a proper lockdown, I do think that the stock market will take a hit. I don't know whether that'll be, to those March lows, but I do think there'll be like maybe a 20% drop in the stock market if the economy was to close again. Now, I don't think Trump will do this because he seems to be more focused on the economy and money than, people's well-being. There's another factor to consider. If Biden does get voted in, he's saying that he's going to raise corporate taxes. Now, if he does do that, that means, all the large companies in America will be getting taxed a hell of a lot more, which obviously will mean their bottom line profit will be lower. So that is something to consider as well. That could affect the stock market in that situation. Now, in terms of unemployment numbers, they're very comparable to 1929 and the 30s as well. The Great Depression. They're not quite as high, but they are definitely getting there, and they are sort of showing, this is the only time really where we've had this high number of unemployment. So they are showing similarities there, which is a very scary and worrying sign. There has actually just been a report come out, and it just shows that the unemployment figures are increasing for the first time since March. So again, this is not getting better. The only thing that's keeping the stock market up has been the Fed up until the last few weeks. It's kind of growing organically. If it does drop again, they might come in again. So it's just such an uncertain time. So what strategy should we adopt during this uncertain and unprecedented time? Now, what we have to remember is bubbles can last a very long time. Now, we don't even know if this is a bubble. Like I said earlier, it does look like one, but we don't know for sure if it is one. So rather than putting all your eggs in one basket where you could get seriously hurt from a financial standpoint, you should diversify. And by diversify, I don't necessarily mean across different stocks or different asset classes even. I think you should diversify to the point where you're riding the wave of this bull run, but you're also in cash on the side as well. Like, you're not 100% in, you're not 100% out. So you're taking advantage of this bull run, but you're protecting yourself if anything happens. And if the stock market does crash, you can buy back in later on. Now, from 1995 to 2000, people were going mad for tech stocks. They were just pouring everything into them, buying all these internet stocks, which turned out to be worth nothing in the end. These companies were a lot of them were dodgy, and people were buying companies, anything that said the word, internet in it or tech, people were just going mad for. And this run happened for 5 years, from 1995 to 2000. And then the stock market crashed in 2000, and it actually didn't return to these levels for 14 years. It took till 2014 for the Nasdaq to hit the highs that it had hit back in 2000. So it's really, really important to learn from lessons in the past and not make the mistakes that people did back then by diving into all these stocks and trying to make a quick buck, when in reality you can get very hurt doing that. Like Mark Cuban last week on CNBC came out and was like, yeah, this looks like a bubble. His niece was talking to him about what stocks she should invest in because her friends are making 30% on their money per day and stuff. So it is looking dangerous. I'm not saying you shouldn't be in it, because you always should be in the stock market, but you should never be 100% in. I really think you should keep at least 20% cash on the side, ready for potential dip if anything were to happen, if not more. I think I'm probably about, the highest cash I've probably been in 5-10 years is probably about 40-50%, I think, something like that. So it's important to be in a win-win scenario. So we don't know if it's going to be a V-shape, a U-shape, a W-shape recovery. So it's best to prepare for all possible scenarios and assume that anything can happen, which it can. Now, I'd just like to take you on a slightly spiritual route just for 1 second. There's a famous Chinese proverb which says, the best time to plant a tree was 20 years ago. The second best time is now. Now, you're probably thinking, what's he on about talking about planting trees? What I mean by that is the best time to invest in the stock market, if you're not already, is today. And obviously, don't go all in. Just buy some stocks, dollar cost average over time. Buy each month, so you're buying if it's high, you're buying if it's low, but you're getting an average over the year. And you've got some cash on the sidelines. If there is a drop in the next few months, maybe towards the end of the year, who knows, you're ready on the sidelines to execute and buy some stocks on sale. I hope you like this video, guys. Really appreciate you taking the time to watch it. I hope you learned something, you found it valuable. If you haven't liked the video already, please hit that like button down below and please subscribe, and I'll see you in the next video.